Hello, welcome to Market Intel. Today we're building on our volatility analysis from last week's video. We're looking at Bitcoin from a macro perspective on the monthly chart again, and we're just trying to understand how volatility tends to behave over time. These videos are a journal for me, a way for me to build my market knowledge, and hopefully they're useful for you as well. But of course, this isn't financial advice and I'm not a financial advisor. So in the last video, I talked about volatility compression on the monthly chart, and in this one, I want to focus on just one part of the picture, and that is the timing. The question is, how long does volatility compression tend to last before expansion begins? And to measure volatility, we're using the BBWP, again, the Bollinger Band Width Percentile, and the same settings as last week, as before. And we're looking at the whole history of Bitcoin going back to, I'm not counting these ups and downs here because it's all a little bit crazy at the start. I'm going from sort of when it stabilized here in 2011. So all I'm going to be measuring, or all I did measure, is how long Bitcoin tends to sit in low volatility before expansion happens. And historically, you can see on the chart, it doesn't stay low forever. So what I did is I went back and I measured every compression phase in history, and we're defining a compression phase as below 20%, just for the sake of this analysis. Okay, so once BBWP drops below 20%. We are counting that as low volatility. We're in a compression phase. And when volatility gets above 20%, we're calling that an expansion. Straight away, and you can probably just get this from the chart, you can see that the sample size is very small. It's only happened a few times. It's only had 7 compressions if we're starting from here, and now we're in number 8 here. And because we're only, on number 8, there isn't that much data to go on. So I think that's really important to kind of say up front that this is an exploratory data set. It's certainly not, there's not any rule set. So when you look at the duration of the volatility compression in the data, a few things do stand out. And on average, the mean time from compression to the first expansion, it's about 11 months. And the median is a little bit lower, around about 9 months. And that tells us that most compressions resolve in under a year. But the average does get pulled a little bit higher by 2 cases of compression lasting more than a year. And it's these back at the start here, the start of Bitcoin's, history. We've got this one, which is an extreme reading of more than 2 years. I think that's 29 months for that one. And then this one over here is around about 17. And that's important because it tells us that historically when Bitcoin has compressed or stayed in a low volatility phase for more than a year, you're already in pretty rare territory. It's only happened 2 times, whereas the other 5 times that volatility has compressed, it has expanded in less than a year. This current compression phase that we're on, as I mentioned in the last video, is on now month number 15. This blue bar here, you can see BBWP less than 20, is the start of the compression. And if we get the measuring tool up, you can see that Jan takes us on to number 15, which is, considerably longer than the mean. And it puts us above the median as well. And I've got a little text box here to kind of help you visualize. It puts us in that upper end of the data, essentially. The upper bound, the second standard deviation above the mean, is around about 30 months. And, so it's telling us that it's rare. What Bitcoin is doing right now in terms of volatility is pretty rare, just in the data that we have. And that doesn't necessarily mean that expansion is imminent, but, it does mean that the likelihood of expansion is rising with every monthly close. Now, if we just step back from the data a little bit, and, with Bitcoin's limited history, you eventually reach a point where analysis stops being statistical and it becomes more about historical comparison. we only have two comparable cases, and that's these two right here. So all we can do is study how these unfolded and maybe try and apply them to what's happening right now. So what we can do is use this, to loosely apply it to the current phase, and it tells us that once that compression has gotten past a year, so that's October of last year would have been 1 year, resolution hasn't tended to happen immediately afterwards. It stays low for a bit longer. So that is 17 months from our current phase of compression, which is that lower data point in the two that are above a year, and then 29 months, which is the larger of the two. And so we have, a little bit of a window implied by those two historical cases. Now, it doesn't necessarily define like a target or even a timeline. It just outlines a potential range just based on the very limited precedent that we have. So, I posted the question at the start of this video. How long does Bitcoin stay compressed for? And, it normally resolves that compression within a year. It expands within a year. But it does say that if it takes longer than a year, then it can persist much longer. And now that Bitcoin is beyond that point, we are moving into increasingly uncharted territory. There is the flip side to this coin, being the expansion phases that I've also looked into and looked at the data for, and there's also some interesting characteristics about those expansion phases. But I'm going to save that for the next video. But just a sneak preview, essentially, volatility expansion that follows extended compression hasn't historically been a short-lived phase. So this isn't really a signal. I'm not telling you that Bitcoin's going to move tomorrow. We're just attempting to kind of understand the environment with the limited data that we have, the limited but very useful data that we have. And so the key takeaway is that every month that Bitcoin closes and remains in this low volatility phase increases the probability, we're going to transition into a expansion phase, a higher volatility environment. And those expansion phases are what we're going to focus on in the next video, like I said, how long they've tended to last, what they look like, and how they behave once they've begun. And I think that's about everything I was going to cover. I hope you found this useful. Feel free to like and subscribe, like I said before. I'll keep doing these macro Bitcoin videos every week or two. And, if you find any of this interesting, or even if you think I'm completely wrong and you have a completely different view on this topic, I would love to hear it. Maybe you agree, but you see a different angle. I want to hear anything and everything you got. So, yeah, thank you for watching, and I'll see you next time.